शेयर मार्केट इतना गहरा कुआं है जो पूरे देश की पैसे की प्यास बुझा सकता है और मैं इस कुएं में डुबकी लगाना चाहता हूँ, बहुत गहरा जाना चाहता हूँ।
मारो मुझे, मारो मारो मुझे, मारो मारो। एकदम इन्होंने वक्त बदल दिया, जज्बात बदल दिए, जिंदगी बदल दी। नहीं ये मजाक हो रहा है, एक सेकंड यार, मजाक हो रहा है। नहीं ये हम यहाँ पे क्या करने आए हैं?
Hi guys, what's up? I hope everybody is doing good and having a great season. A new financial year has begun, so I thought we will bring in some financial education. And that is one of the primary ideas for launching this stock market series. As you've seen in the beginning part, there has been a lot of misguidance about stock markets. Attitude of get quick money is seen so much in the people right now owing to the pandemic and all that. Stock markets is such a place where there is a 90-90-90 rule, which means 90% of the people lose 90% of their capital in just 90 days. And it's not my own theory, it's a proven theory in the stock markets. Many people have written columns about it. For those who are watching this channel for the first time, I am CA Harish Krishnan, a practicing chartered accountant into my 11th year of practice now. And stock markets have always been my passion, but I have never discussed about stocks or stock markets publicly because I think it's every individual's choice and skill to deal with it, because you win it, you take the credit, you lose it, you got to own it. So that has always been my fundamental in dealing with stock markets. And what you will see throughout these series is I won't make any stock recommendations. It's going to be a thorough educational series, and lot of episodes are going to come, right from basic definitions to advanced skills on both investing and trading. Throughout this series, I'm not going to share any opinions. Yeah, I might give some examples of my personal experiences, but I don't think you could copy one strategy. That's a pro tip that I can share right in the beginning. Do not copy anybody, have an understanding and make your own strategies, and that is why I'm bringing this very extensive series to you. Let's get started. Of course, when in the stock markets, we need to have money to do all of it. So where do we get the money from? Are you going to take stock markets as your career, or are you going to do something else which is your career and invest the surplus money that you have into the stock markets? But before we discuss what we do in stock markets, first let's try to understand what should we do with our surplus funds if not for stock markets. So the multiple options that we have, first I think one of the safest options is to put it in risk-free investments, which are our fixed deposits, government bonds, and of course into PPF and other things. But as you know, the very low interest fetching areas, but risk-free, totally risk-free. Your money, your principal, your capital, by whatever name you call it, is absolutely safe. But when you want to add slight risk to the story, you can put it into real estate, land, buildings. And we all know how real estate works, right? It's sometimes the graph is on a boom, sometimes there is a recession. We have seen dull periods like the entire pandemic where everybody was in lockdowns and all that. No sale at all, zero. You're not even coming out of the house. So land and building investments, even those people who invested in buildings, residential buildings, thinking that they will get rental incomes. Many people have shifted places and they've gone back to their homes and villages in cities, so lots of houses are vacant. That period didn't fetch them the return on the investment that they thought of. So pros and cons are always there. Then the next one we talk about are some of the precious metals, gold, silver, and there are a lot more. Actually, we will do a separate segment on commodities wherein we will even talk about steel, aluminum, copper, and then in stock markets we even have commodities like the crude oil. So should we put our money there, or currencies? Can we deal in forex? Would that be more profitable? Yeah, that segment is coming up later. So that's an advanced part of dealing with it. So let's be clear on our fundamentals and then go there. Then if you don't want to do anything on your own, there are asset management companies called mutual funds who do this. They also put the money into stock markets, but they do it in a very phased manner, and the loss is pretty much limited in terms of what you'll. But anyway, you see the advertisements, right? They say mutual fund investment is still subject to market risk. So if you say there is no risk, no, but very very less compared to putting your own money into stock markets and managing it. That requires a lot of skill. You don't want to do that, then pretty much you can put into a mutual fund or a systematic investment plan called SIPs and relax. Or nowadays, if you have a lot of money, you can do one thing is to invest in great ideas. The lot of startups that are coming up, you can turn out to be a venture capitalist, put your money into their venture, see that grow, and then you can pick up the big stake there. And this is again a huge risk because you're budgeting on somebody's idea. But like I said, if you have surplus funds, why not help your friends who are into the startups and all? But friendship aside, read the entire memorandum of association or the deed of formation for them, understand what business they are into, what are their growth plans, and then only do this. Because again, investing in a startup is altogether a different story. If possible, after the stock market series ends, I will do a video on that. It's lined up, but then it will be a little long time for you to get into that. Then if all these options are kind of exhausted, because I started telling you with low risk, low return, to now one of the highest risk areas to possibly the highest returns. Now when I say highest returns, it's not going to be talking about 15%, 20%, 25%. Boss, 25% is like 5 or 4 to 5 times of what the FD gives. That's way too high. Now what I'm talking about is 100, 200, 300 times returns, or 300% returns are there. And in fact, sometimes, like I said, mind-boggling numbers are there. 600% return and all also have been seen. Some of the top investors in India have seen that return. And I will show you in one of the videos as to how those things work in the very long term. Right? But if you want to get to the basics into stock markets, yes, they are a great place to make money, provided you have the right research with you, provided you have the right understanding, and more importantly, you should be very clear the fundamentals. What do you look at stock markets as? Are you willing to look at stock markets as your day job? Like you want to sit in front of the screen from 9 to 3:30 and then make money around that by doing trading? Like trading again has buying stocks and selling on the same day called intraday, or buying today, selling tomorrow called BTST. That's about the regular trading part. And then you don't want to take all that risk, but you want to analyze the stock fundamentally, see, and you have some time horizon, 3 months, 6 months, 1 year. Some people give themselves 3 years, 5 years, and some people go way beyond, give themselves 10 years. And I've known people personally here who've told me that they've given themselves 15 to 20 years. And I've seen them, like their wealth creation pattern been amazing. But will you have the patience to do that for 20 years? That's up to you. But all I'm saying is you can go that long. So that's all with respect to understanding what should you do with respect to your money in stock markets. But once we enter into this, the story starts with, what is the stock market? Like, we know this word market, but what is stock market? In today's context, it's all an electronic marketplace wherein you get to deal things online, no offline or no trading through physical aspects. It's all online. And it facilitates you to transact in stocks and commodities. Like I said, stocks are the shares of listed companies which are being listed on stock exchanges. We'll see the procedure also a little later. And all it is, like in simple terms, you're seeing there, if you want to buy a stock and if you want to sell a stock, you want to place, right? So that place of exchange is nothing but our stock markets. Big question, how do I enter the stock markets? Is it like a place where I can physically go and be there? No, you can sit back home, relax, have your smartphone and simply start off trading in stock markets. How? By opening an account with a registered stockbroker. You can't directly deal into the stock markets, so you need to take assistance of a registered stockbroker. We'll discuss more about how to do this in a later part, but right now, just to make you understand, a few of the top registered brokers in India are these people that you see on screen. They're all there and many more are there, and that list is actually a long list, but I'm just put up some very famous ones here. Moving forward, we will have an understanding as to why should I go, because many people who don't understand the company formation, how this entire process works, they have a basic doubt. Why should I go to stock markets? Can't I directly go to the company and say I'm ready to invest in your company? How many companies will you go and how many places will you search for good companies, and then how will you invest in that? So that's a tedious task, right? So not only that, if you want to buy directly from the company, they should also be willing to sell it to you, right? So these issues are there, and in order to bridge that, you have a process where the company comes out and says we are ready to accept money from public, which is what is called a initial public offer. So till the time any company comes for an initial public offer, you can't buy their shares on a public platform. Now, private investments, as a private equity investor, you can always do it, but a listed company which is or about to be listed, which wants to list shares and then go public, will go for a IPO, which is called an initial public offer, where the offer is made by the company to whole public. Whoever is interested can subscribe to this, but one simple catch: if you have subscribed to an IPO and you have been allotted the shares of the company, then again, where will you sell those shares? You've bought shares through the IPO, it came into your account, and then you want to sell it. So again, you take the help of secondary markets called the stock market. Some people may have the doubt that I missed the IPO. Can I never buy the shares of a company again? You can always buy the shares of any company at any point of time because they're being traded in the stock market. So, two routes to buy shares. One is through the initial public offering of a company, and there is also something called as an FPO, a further public offer. I'll do a separate segment on both IPO and FPO and how it works. And before investing into an IPO, what should you do? We is having a separate series on that. Now it's important just to understand that yes, you can buy through an IPO or you can directly buy from the stock markets. But for you to sell what you bought in stock markets or what you got subscribed through an IPO, you can sell only through the stock market, that too only in electronic form. Now when I say electronic form, the technical term that is used for this is called as dematerialization, or in short it's called Demat. So we will talk about Demat accounts in a minute, but what we are now going to discuss is what happens the pre-IPO. Just a quick insight so that you know what all are being done by the company. Now there is a regulator, like how banks are regulated by the Reserve Bank of India. Stock markets are regulated by the market regulator called SEBI, Securities Exchange Board of India. So every company, when they want to go public, that is when they want to go for the IPO, they have to take the approval from SEBI. They have to submit a few documents to them. Actually, the procedure is a long one, but from a layman's perspective, we understand a very few points. That will be more than enough. So first and foremost thing, the company will appoint a merchant banker who will take this issue forward, who is also called the lead manager, or he's also called the book running lead manager. I think I gave lead manager here, that's more than enough. Then merchant bankers, they will also do an aspect called as underwriting, because as per the guidelines, 90% of the issue proceeds have to be done as minimum subscription. So when a company goes for an IPO, they have to at least attain 90% of whatever the proceeds that they've offered to public. That's called minimum subscription. And if they fail to do that, the entire issue stands cancelled. So in order to not go below that 90%, underwriters are there. So if at all the entire issue got subscribed for 85%, 5% is left over, underwriters will buy that. Only 70% of the issue got subscribed, balance 20% underwriters will buy that. So that's what the lead manager will do here. Apart from that, we got to submit all the documents to SEBI and get the approval from SEBI. And when SEBI says, okay, we've examined this, we give a go ahead, you can go to the public and now ask for money. Interested people in public can apply for the public offer. But why will people be interested? Only when the share comes at an attractive price. So from a investor's point of view, we are always looking at how much should we invest into this company, what is their price band. Now that price band will be available by the time the prospectus is released. Now the most important document for this entire IPO story is the prospectus. because they will tell you everything about the company, everything about the directors, and everything related to their future plans in this document called the prospectus. So, somebody who wants to invest in this company should thoroughly read the prospectus. Of course, there are other ways of doing the fundamental analysis of the company, but when you are subscribing to an IPO, prospectus is that document that shows you the whole world of what that company has been through, and if this issue is successful and if they get all the money that they are looking for, what will they do with this money? Because that is also clearly to be emphasized, as there are rules in the Companies Act that the company cannot use the funds raised through the IPO or FPO to any other purpose other than what is stated in the prospectus. So prospectus is the key document, and once you are allotted the shares, you become the shareholder of the company, which means literally you are having ownership in that company. Even if you have one share in that company, you still are owner of that company. So if I have 5 shares of Reliance, I can proudly say I am a part owner of Reliance. It's not a joke, so you can really do that. That's what it is. So Mukesh Ambani, is he the owner of Reliance? Yes. Are you also the owner of Reliance? Yes, because you hold a part of it, and that's all legal to call them the owner. So once you are happy with the price, then there are requisite documents. Nowadays you can do all this online, right? There is a procedure for IPO, as I told you. We will discuss that entire procedure in a separate IPO video. For now, a 3-day window will be opened for IPO. When it opens to closes, between that period, you can go subscribe to the IPO. And once the subscription time ends and the company has reached 90%, or nowadays the companies are not just reaching 90%, if they ask for, let's say, 10 rupees, public is willing to give them 50 rupees. So that means issue is getting oversubscribed by 5 times, 10 times, 15 times, and I've seen some recent IPOs get subscribed even 70 to 80 times. So companies asking for 1 rupee, people are ready to give you 70 times of that. So that's like, because the company is fantastic, its fundamentals look very good, and its future plans look very promising, and people believe that if they subscribe to these shares at this price, in future it will go seriously to a great level. So, and that would be a great call for them to invest at that point of time. After all this process happens, there's so much background that goes on before an IPO comes. Now you might have seen people show you a lot of IPO videos and say this is what the company is, and then invest or not. Nobody goes back to see whether everything has been complied. And of course, as a layman, you need not know all this. That is also there. But when you are walking into a new path, it's always better that you know all sides of the story. And then finally, one fine day, shares will get listed. That's in a very short while after subscription, listing on stock exchange. I hope you guys must have seen that they will go to the stock exchange and ring the bell to mark the listing. And that day is a great day for the company because they have gone public and now their shares are listed for trading on the stock exchanges. That will be a great sight to watch for every entrepreneur who started as a single individual or a small group of people, and then now there are lakhs of shareholders. That's an amazing feeling also. To talk about what after the IPOs, but before which I want you to take a look at some of the recent IPOs. Burger King, Angel Broking, Gland Pharma was a great IPO, and Nazara, this was something again which oversubscribed 70 times or so, if I'm not wrong. So that was quite an amazing IPO, and then of course it got listed, and on this very same day it lost 20% down on this. So I'll discuss with you all that, how it happens in stock markets later, but these are some of the recent IPOs at the time when this video is being made. Okay, so moving on, we are more interested in post listing what happens, because that's what is interesting us, right? Because we are there in the post listing scenario, more on dealing daily with the stock markets. So if you want to sell those shares that you were allotted in the IPO immediately right after listing, or you want to hold it for a few days and sell, you obviously have to come to the stock market, which is popularly called as a secondary market. The IPO side is called the primary market and the stock market is called the secondary market. No, I didn't buy anything in the IPO. I bought it in the stock market and I want to sell it in the stock market. Fair enough. You can do both. Subscribe in the IPO, later sell in the stock market. or buy directly from the stock market and sell it in the stock market again when you make a gain, or of course if sometimes even you can make a loss. But to do any of these and either of these things, as I told you some time back, we need to have an account with a registered stockbroker, and that is mandatory. So I've given you an example of one of the leading stockbrokers right now in India, and there are a lot of people who can do this service for you. There's that they will help you open what is called as a Demat and trading account. Okay, the trading account is with the stockbroker and the Demat account is with the depository. I'm going to also tell you who the depository is. But one of the basic essentials for anybody who hasn't had any previous experience in stock markets, for you, the first thing that you need is to get a trading and Demat account from one of the registered stockbrokers in India. Then what is the story of Demat and trading account? How do I do this? Where do I have to run around? Actually, you don't even have to move an inch. It is so amazing today that the technology we are blessed with. I remember opening a trading and Demat account by signing almost 40 or 50 pages of a booklet, to opening a Demat and trading account in less than 15 minutes in the recent times. So we have come way forward in this technological world. So right now you can open the account online. It's very easy. Choose the right registered stockbrokers. I've shown you some examples. You can choose from any of them. Now normally at this point of time, many people will say you can choose to open your trading account or Demat account from the link given in the description, but unfortunately I have no sponsors for this video, so no links in the description which say you have to open it with them. Probably if somebody comes after seeing this video, you might find the description being updated at a later date. But for now, you're free to open wherever you want. Choose, because there are different brokerage rates that they charge. And how about those brokerages? What will suit you? All that has to be considered, and then only we have to step in. KYC documents, predominantly the Aadhaar nowadays. Everything from the DigiLocker is, if you give the permission from there, all the documents that are required are obtained. And if you are able to authenticate these documents digitally, the process is over. All you need to maximum do is to, write something on a paper and take a photograph of that, just to prove that you are not a bot. That's all. So you are a real person, to show that and fix that confirmation. We are only doing that little effort. Rest of it is all going to be very quick, and you can start trading right from the next day, or maybe the one after that. It's a working day, 1 or 2 working days, and Demat account should be active in 3 days time. If the broker has to deal on behalf of you in the stock market, you have to give them a signed copy of the power of attorney. Read it before you sign and understand what is there in that. There are a lot of frauds that have happened, but now the scenario has changed so much. Everything is digital, so the possibilities of frauds and other things are less. Still, it's better that you are being aware of all these before you sign the power of attorney. Once you give the POA, that is the power of attorney, to the broker, within 24 hours to 72 hours, everything will be active, and you can now call yourself part of the stock markets. Then a trading and Demat account will be opened on your name. All the details will be sent. Trading account is with the broker, as I told you, and Demat account is one of the depositories. Now, who are these depositories? In India, we have 2 depositories. I'm going to talk about both of them in a minute. But before which, I want all of you to understand that there is something called as annual maintenance charges for maintaining this trading and Demat accounts with the registered stockbrokers. Why I am emphasizing on this annual maintenance charges so much is, during the pandemic, millions of, I think you must have seen in the trailer and in the intro, millions of trading and Demat accounts have been opened, and now a lot of people are not even trading. As I told you, it was the pandemic effect. People couldn't sit idle in their homes, so they started thinking of ways to make money. They thought stock markets be amazing. They started, because see, logic is very simple. What we didn't witness for all these years, just in 2020, in 2 months, you can't change the minds of 5 million people to invest in stock markets. That's only because their day jobs are affected or their monthly salaries are affected. lot of people have come here because there is lack of financial education in this country. Hardly 3% of the people are into this. Okay, but in the Western countries, it's in 20, 25, 30, and in some countries, it's close to even 50%. That is 50% of that country's population invest in equity markets. But as a matter of fact, we've never been educated about any of those things right from the beginning. So at some point of time, if you ask a student who has done all his studies in science, he still wants to come and invest somewhere, he has to, like be wondering as to what to do. So which is one of the reasons why many people in this country have not turned to stock markets. Without hard work, without patience, without dedication, and without understanding, we will never be able to achieve anything in any field. If this is not there, then it's going to be a turmoil. Some people have seen success initially, like they started making small profits on a daily basis, and then they were like, yeah, I now know how to play this game. If you get a trading and Demat account for yourself, greed also comes for free. This is what I believe. Like now you believe that you can do anything. You are in charge of your financial freedom, and then you start trying to extrapolate the situation, and that goes completely out of hands at one point of time. The best of the best traders have lost money in day trading, right? The best of the best value investors have lost their money also by investing in some companies. This point I want to emphasize so much because many people now have left those accounts open, and still their accounts are now going to negative balances because of they're not paying these annual maintenance charges. Since you've opened a trading and Demat account and without knowing if they've agreed to the terms and conditions, which is what many people do. They won't even read the terms and conditions, and they'll just go and click on I agree to all the terms and conditions. And now these brokers, they have a right to recover all that money that is showing in negative, because these brokers intimate to both NSE and BSE as to how much balance is there in a trading and Demat account on a daily basis. Okay, so how much fund balance is there and how much securities balance is there, it is a duty of the stockbroker to inform. So if you are not trading, or if you've lost interest in investing, it's better that you surrender and close this account. Don't leave it open like that, because it runs into negative balances, and that is exactly why I'm highlighting so much on that particular point. Now, as I told you, your Demat account is with the depository. So two depositories in India, very popular, NSDL and CDSL, the National Securities Depository Limited and Central Depository Services Limited. Two of them, they will have your Demat accounts in electronic form, like how we have money in bank. We have all our shares either with NSDL or with CDSL. Now at this point, if you ask me, do I get a right to choose NSDL or CDSL? Technically yes, only when you choose the stockbroker. So stockbroker has accounts with either NSDL or CDSL. Now I showed you Zerodha, right? So Zerodha is connected to CDSL. So if I have a trading and Demat account with Zerodha, my trading account is with Zerodha. In turn, I get to have a Demat account with CDSL because Zerodha is connected to CDSL. Like that, there are stockbrokers who are connected to NSDL. You will get a Demat account in NSDL. And NSDL and CDSL both are going to give you something called as a client ID, which will uniquely represent who you are in NSDL or CDSL. And then they will also give you another ID called as a DPID, which is the depository participant. And the depository participant here is your stockbroker. So once you get your client ID and DPID, you can obviously go check on their official websites as to how many shares you hold and in which company do you hold. All these details will be available. And not only that, NSDL and CDSL will keep sending you the statement of account on what your holdings are. What are the two stock exchanges in India? Predominantly in India, we have two major stock exchanges because the others are like, even if they're there, it's like they're not there. So you don't really have to consider them. The two major stock exchanges, one is the Bombay Stock Exchange, shortly called BSE, and the other one is the National Stock Exchange called the NSE. The baseline index for BSE is the Sensex, which takes the 30 stocks into consideration, which keep changing from time to time. And the baseline index for National Stock Exchange, the NSE, is Nifty. So the movements in Nifty and Sensex indicate how good or how bad the market situations are right now. Nifty went up by 150 points. The Sensex shot up by 500 points. Sensex collapses with 800 points. Does it mean every stock in the market has fallen that day? No. So the overall trend has been, very clearly shown by these indexes. Are these two the only? No. These are the baseline indexes. There are so many more indices which we will discuss in the coming videos. In how many segments of the stock market that I can deal with? First of which is called the equity segment, that is pay cash and buy equity shares. The third one is about the debt market, where in debt market, bonds, treasury bills, that's altogether a different world. But what is going on in the debt market, that will have a great impact on the stock market as well. The bond yields, the dollar indexes, the lot of factors, the treasury bill factors, all this will have a weight on our equity markets. So now I think you're getting a taste of understanding that there is so much in stock markets, and if you have been watching this video till now and if you know everything of what I said, that's pretty amazing. And if you didn't, and if you have known something newly at this point of time, you might go leave a comment, and that will motivate us to make more in this direction. First things first, we think that like us there are millions of people, fine, but all retail investors put together, that is people like you and I, a very small portion, because major portion of the market is controlled by somebody who called as the FIIs and DIIs, that is the foreign institutional investors, who are corporate entities abroad, like they are a hedge fund company or something there, and who wants to invest in India. So they are foreign institutional investors, and their buying and selling will affect our markets like anything, because these guys don't play in small numbers. These guys bring in like thousands of crores. They can actually take a stock up and bring it down in quick time. The next player in the market is the domestic institutional investors. These are corporate entities that are based in India, somebody like life insurance corporate. Then we also have mutual funds and asset management companies who buy in the stock markets, and then we have NRIs who are not resident in India but they are abroad but still are able to buy stock here, very much possible. And then finally comes the retail participants who are in India, who are individuals and who deal with any particular amount. Now all these people, they will have different strategies, and all these people, they have different entry and exit points. If you wait for the right entry in stock markets, you will never get one, and if you want to take a right exit, then again you will never get one. So what is the right time to enter the stock market? When you have surplus money. That's where we started our discussion, right? So if you have money, enter the stock markets. When do you want to come out of the stock markets? When you want that money back. That's it. How is the market doing? I will wait for the market to climb. See, you need to have patience. That's why I said invest your surplus money. But when you fall short of funds that you've invested in stock markets and you want that money back, what if the stock is undergoing a cycle and right now it's bottomed out? I will show you this with an example in the upcoming videos. Like you've waited for a few years, stock is bottomed out completely, you've lost hope on it, and you said at least let me pull back my little left out money, and you sold that entire stock and you pull your money out, and from there within the next 3 years the stock price jumped so many times, like say sometimes even 5 times, and then you are sitting and crying, I should have just clinged on to it for some more time. And that's what happens. So that is why patience is a key. Nobody can tell you what is the right entry and exit point. So be very clear. You enter at a time where you have money and see which stock to select. That's more important. Everybody knows, everybody thinks rather what they know what to do with their money. But how you channelize that, it's cool. If you don't want to take all this tension, put the money in fixed deposit, relax, sit back home. There's a fact that is waiting for you at the end of the video, which I want all of you to know. But before we get in there, we have a few more things to learn, which is very simple. The stock market timings. Pre-market session opens at 9 to 9:15 because, you can't open the stock markets at once. There's a huge volatility that will go on, like 20 rupees, 30 rupees for a stock price will jump. And there are a lot of people in panic. They get, tempted to sell or buy. So that is why 9 to 9:15 pre-market session, and then from 9:15 and 3:30 it's all your game. You can play the intraday trades. You can, in intraday they're again different. Some people wait for only a few seconds to make their money. They're called scalpers. And some people are swing traders. Some people wait for the right momentum. Some people trade on price action. So there are different types of people, which that's why I told you you cannot learn everything and everything in one session. So you got to have patience. 3:30 to 4, there is a post market settlement time. Now post 4 o'clock, that is 4 o'clock in the evening to the next morning 9, it's called the AMO, aftermarket order. You can place it at any point of time and it will be picked up only in the next trading session whenever it starts. Many people, they get emotionally carried away at 9:16 and then they will make a quick decision. 9:15 to 9:30, 9:45, these are times where you can extremely be you can make extreme money or you can lose extreme money, because there's a huge volatility. So you got to let the market settle in, you got to let the market show you a trend and then take things. With time and experience, you will understand how things operate in that. There are a lot of people who make good amount of money between 9:15 and 9:45, but that's not everybody's game. All this sounds exciting, right? That is what I told you. A long series is pending for you. All you need is patience. And the best part about this entire series is all free. Okay. So maybe sometimes you might have to see some advertisements or skip those ads. That's the only thing. But for it, I think it's absolutely free for you to learn. A lot of knowledge being given away. So we will wind up our discussion today with this on understanding how do you get returns in the stock market. There are two ways that you basically get returns. Is if you buy a stock and hold it, all you do is get a dividend income. Okay, at the end of every year you get a dividend income if the company proposes it and it gets approved in the general meeting. There may be a lot of years where you won't get any dividend because the company has not declared it. That possibility is also there. Eventually, this is one portion of your income. But at the time of sale, which is your other portion of your income, is the capital gain. For all your holding period, whenever the dividend is declared, final dividend and interim dividend, the two types of dividend, you will get whenever it is declared. And when you sell, so if you sell it at a price which is higher than the price that you bought it, I'm going to show you that with an example, and that's called a capital gain. Now in capital gain, two scenarios are there. If you buy a stock, sell it within 12 months, in less than 12 months, that sort of a capital gain is called as a short-term capital gain. While if you hold it for more than 12 months and sell it, then it's called a long-term capital gain. Shortly, both are called as STCG and LTCG. Now, if somebody says that they have made 1 lakh profit in a day, that sounds very interesting for the opponent to listen, right? Which is taxed at a particular percentage. And if you are a high tax payer, the tax rates can range up till 30%. So did you really make 1 lakh rupees gain net of taxes? Now they also don't discuss with you what is securities transaction tax, what is the extent of stamp duty that you have to pay, what is the brokerage that you have to pay, and brokerage will attract GST as well, and then the exchange fees, that is at a very minute percentage, but all this comes to a pretty handful amount. So if you made 1 lakh intraday profit, 1 lakh is the gross amount of profit that you made. You bought a stock at one price, you sold it at another price, net difference multiplied by the number of shares gave you 1 lakh. Nobody accounted for all the brokerages and charges. And then whatever income you get is again taxed, be it short-term capital gain or long-term capital gain. Nobody is explaining all this. Maybe that's because they are not aware at that point of time by themselves, or because if they tell you all that the profit amount shrinks, they don't want to mention. I don't know this reason, but I, as a chartered accountant, it's my responsibility to make people aware that yes, if you are making dividends or capital gains, now with the latest Finance Act in place, dividends are also taxable. Okay, so there will be one exclusive video in this series about the taxation on gains, and there is a facility to carry forward the losses. And many people don't even understand what are speculative and non-speculative gains. Don't worry, you are in for a great run. Lot of things about the taxation part of the stock markets will also be discussed. So now let's pick up the example of Reliance Industries, one of the prominent companies in India, to understand these two concepts about the written. First one is about how the value changed. Look at, I've taken a long time horizon just to show you how things move. So you can see this on 1st of April 2016, price per share was 517 rupees. And let's say I invested the 50,000 rupees that I have with me on that date, 1st April of 2016. I invested 51,000 rupees, 51,723 to be precise, roughly around 52,000 rupees in Reliance. And then what did I do? I just relaxed. I didn't sell it anytime. I bought it from the secondary market and I'm just willing to hold. For how many years? Let's see if we hold it even till today. 2017, 2018 and 2019, you can see 687 to 892 to 1391 share price went up. Owing to the pandemic and its announcements in March, and then April is a very bad time, so price came down to 1080. You can see that year was not a great year. Post pandemic, look at the shoot up there. Post pandemic, 1st April 2020, the stock got beat up. Actually, this is the price on 1st April 2020. Reliance kind of reached to an all-time low of 848 or something during that period. In the same period, before 1st April 2021, before, it reached an all-time high of 2300. This 2006 that you see is the price on 1st April 2021. But somewhere during Jan or sometime, December, Jan sometime, it reached a all-time high of 2300, close to something that. So if you took an exit at that point of time, it would have been great. But if you're still not taking exit and holding, even today, the 100 shares that you have will remain 100 shares, and the value that was there at 51,000 rupees is now at 2 lakh rupees. You can see that. And there, I will show you how the capital gain is made. So, 1st April 2016, it was 517 rupees. So, the value was 51,723. And if you decide to sell on 1st of April 2021, at the closing market price or during the day you sold it, let's say at 2006, and you will end up making 2,615,000. So from 1st of April 2016 to 1st of April 2021, if you hold the stock of Reliance and sell it, you end up making a gain of 1,48,000 rupees. Let's say close to 1,49,000 rupees. So this is the capital gain portion. So only when I sell, I will account for this capital gain portion. But before all this, what happened to me through all these 5 years? Did I get any income? Yes, you would have also got income from dividends, but not very attractive here in this case. The face value of this share is 10 rupees. What is face value is coming up in the next video, where we are going to discuss all the market related terminology. Dividend payout was at 10%. Now this 10% will be on the face value. So a 10 rupee face value share at 10% will give you rupee 1 dividend per share, and you are holding 100 shares, and this year they declare 10%, so you got 1 rupee. Next year they declare 11%, but constantly they have been declaring 10%. Not a very fancy amount, right? Though dividend is not a very attractive factor here, there are many stocks where they constantly keep giving good amount of dividend. So that is how you understand what dividends and capital gains are from a particular stock. I just picked up that as an example for you to understand it better. So that brings us to the end of our very first session on the very basics to the stock market. Is just an introduction, and I know, yes, there are a lot of things more to understand, and very, very exciting and interesting things are coming up, and they will all come up in a more exciting way, right? From what is a bull run to what is a bear market to what is a face value, what is stock split. You can't learn everything in just 1 or 2 episodes. Please remember that, and let it come through to you in a bit by bit manner, and take time to understand. And once you are fully aware of all these things, you can do your own exploration into this particular space and then try and understand many more things. As I told you in the beginning, I'm going to give you a very interesting fact check that has been there, which is nothing but the risk and reward go hand in hand. 2 things that you have to very clearly remember. If you want a high return, you got to take a high risk, while if you're okay with a lower return, it also comes with a lower risk. So on that note, I want to close out this segment, and thanks for watching till here. If you watch through the entire episode, which I hope so you do, and you've gained some information, Do not forget to share it with people, because that's what I've been doing now, taken a decision to share all this information with you. And as I told you, many more wonderful things are coming your way in the upcoming episodes. Stay tuned. On every Wednesday, a stock market series video will be uploaded till the time the entire series is finished. I will see you in my next video. Signing off is Harish Krishnan. Thank you.